Hello, everybody. Welcome back to another episode of Daily Palantir. This is episode number 0018. Why do I do 0018? Because it's cooler than just episode 18. And we are here. We are live. Ronald, Roy, Midwest, Austin, Charles, Yao, Johnny, Nate, Mike, Archangelo, Robert. Thank you all for being here. Super awesome to be here. Technical Trader Wong, thank you all for being here as well. Awesome mod in the chat. All right, now today's a special episode. The reason today's a special episode is because, and the Twitter folks can't see it, but that's okay. You'll be able to hopefully smell it from Twitter. We've got vanilla chai candles with us. All right, so we are going to be lighting up a vanilla chai candle. We're going to be, I don't think I've ever had a romantic candlelit dinner. I mean, maybe with my girlfriend years ago, and I'm forgetting it, but I don't think I've ever done it. So instead of doing a romantic dinner, I'd rather do a romantic episode of Daily Palantir. So here we go. Ironically, Mark tweets or says, I spend more time with you all than my girlfriend. That's how you got to do it. That's how you got to do it. I mean, this is why girlfriend will be there forever, but Palantir, this is an opportunity. Okay, here we go. Taking the fire. Do not do this at home. I always want to say that. All right, we're lighting her up. We're lighting her up. Twitter Spaces, you should be able to smell the vanilla chai. Whew. All right, this just got a little sentimental now. We got some vanilla chai. Here we go. Ladies and gentlemen, let's discuss. We got a lot of stuff to talk about today. Happy you all are joining me. We've got some interesting news in the world of Palantir. First thing we're going to do, as always, is go to the stock because we've all got a shit ton of money in this company and we're not here for fun and games. We're here for some of the fun, none of the games. We got to see what's going on with stock. After that, we'll get into a couple of news items I wanted to talk about. Palantir secured an official deal with PwC in the United Kingdom to help the London police deal with crime. So we're going to be discussing that, the implications of that, what that means for their trajectory to get the NHS deal. And then after that, we have another important thing that's going on, which is the NHS got a massive data breach in terms of they got hacked with ransomware. And so I wanted to talk about that and see if Palantir can also, solve some of those issues. So let's get into the stock. Right now, it is officially after the markets, 9:18. So 8 p.m. is when they end. Palantir moved up 1.17% today, up 19 cents at $16.49. We were at a high of 16.82. If you were on the live stream with Adam and I, we were seeing this kind of happen live. I think we tapped out at 16.84. Thought maybe 17 was possible, but it immediately got sold off right when we got to 16.82. And we went all the way down to 16.26, even 16.13 at one point, and we recovered back to 16.49. Look, the price action is pretty phenomenal. I didn't expect it to have fun in the 16s this week, but it's having fun in the 16s. Now, one macro implication for what's going on with Palantir is that we've got CPI data coming out tomorrow. For those that don't know, CPI, consumer, what does it stand for? Consumer, what is it? I forgot. CPI data. What is this? I should know this. I should definitely know this. What does CPI? Oh my, it's consumer inflation, consumer price index. Oh, wow. That was a brain farmer. Okay. So consumer price index. Most analysts that I've looked at today on the Wall Street Journal and all those other news publications are saying 4.0 was last month. We're going to head down to either 3.2, 3.1, or 2.9. If that happens, this market's going to be really fun. Now, it's interesting because I don't know if we've baked in a lot of what the market thinks is going to be a nice top line reading on CPI. Maybe it is baked in a little bit. That's kind of the only thing to me that explains the run we've had Monday and Tuesday. No major catalyst other than the market's expecting a good inflation report. What I think could send the market a little bit higher and really continue this rally to go is core PCE, just core inflation numbers have been sticky month over month. I mean, very slight declines or no declines. If that goes down, I think I was reading 0.3%, and CPI will go from 4 to 3.2, and then core will go down 0.3. Even if it goes down 0.1, it's going to show progress that the economy is getting to a point where we're getting into a deflationary stance, or not a deflationary stance, but at least disinflation. And if that happens, we're going to be in a much stronger momentum. It's going to be fun. I want to share Chris's tweet. If you guys are not following Chris Patel, you should absolutely follow Chris Patel on Twitter. He had some thoughts. We're going to be talking about it on Finance Junkies as well. But his thoughts were Seems like we're about to go from worrying about inflation to worrying about deflation. Even with the Fed coming out and saying they're likely to hike 2 more times, I don't think so. I think we're likely to have one, maybe, but based on the data below, I don't think the Fed should raise anymore. Instead, just let the economy get used to the current rates. And I think that's a pretty sober, normal take. Most people are thinking the same. Let the economy figure it out. And if that's the case, it's obviously going to benefit Palantir and all of the other stocks in the growth sector that are going to be benefiting as well. So it's going to be good. 2.9 to 3.2 will not happen. Well, we'll see. I mean, I think it has a shot. I wouldn't go so far as to say it's definitely not going to happen. I think it has a shot. Tomorrow, we will get everything. I think the data comes out 8:30. So 8:30 tomorrow, we will know. I usually don't cover CPI live. I just, I'd rather like ingest the news, kind of look at some data, and then on the live stream, we can talk a little bit more intelligently, hopefully, about it. So I won't be live, but we'll see what happens. I'll probably be on Twitter when it happens. You will trust CPI report or Trueflation data? Well, yeah, that's the case. I'd rather trust Trueflation, to be honest, and hopefully CPI reflects that. So let's get into the first big news of the day. This Palantir UK news thingy. So I'm going to do a video on this tomorrow. I'm just diving into what's going on here, but Palantir officially tweeted this out. We saw this as a community, I think, like a week ago, but they officially put out this press release. So this is the cityoflondon.police.uk website. And we're going to read through a little bit of what they're saying here. So City of London Police has appointed 2 new suppliers to provide the fraud and cybercrime reporting service, which will replace Action Fraud. Capita PLC has been appointed to operate the contact center on behalf of the City of London Police and provide the technology to enable reporting, such as a new website and reporting tool. PwC UK, PwC, one of the largest consulting firms on the planet, will provide the technology services for the crime and intelligence management that underpins the NFIB, National Fraud Intelligence Bureau. PwC UK will also support the City of London Police, integrate and manage the services. The new service with both suppliers will become operational in Q2 2024. Now, PwC is really important because PwC is, you guys are saying the internet's bill. Let me just close out some other programs. Let me help out the Wi-Fi a little bit. PwC is where CodeStrap went to go work, right? And why did CodeStrap go work there? Well, essentially, when he left, he said that I'm going to be helping organizations deploy Foundry. So PwC is a consulting firm, just like Accenture is a consulting firm. And they hired CodeStrap as a consultant, essentially, but a technical consultant to be able to deploy these software systems in major organizations. And so it seemed like the City of London Police has worked with PwC to be able to bring Palantir into their operations and see what they can do. I'm just going to Command F Palantir. A quote from them, Scott Logan, the partner, says, "The recently published National Fraud Strategy was an important step forward in the UK's fight against cybercrime and fraud. We're privileged to be delivering the technology solution which will help underpin that fight. We look forward to working alongside the City of London Police and our technology alliance partner, Palantir, bringing our experience in delivering technology programs and expertise in managing risks around cyber and economic crime to help deliver this vital service to citizens and businesses." I don't know to what extent Palantir is going to be used. Is it going to be something like a Foundry, something like a Gotham, something like an AIP? You would imagine it's something like a Foundry, taking all of that data they have on fraud, cybercrime, and then pulling it into risk mitigation, essentially, to be able to spot patterns and figure out what's working, what's not working, and how can we attack this strategy in a meaningful way. Fraud is obviously a big deal. I mean, cybersecurity industries are built on top of this idea that there will be more fraud. I mean, what's the name of the CrowdStrike? It has an entire business dedicated, right, to making sure that companies and governments can be better prepared for when fraud is going to happen. I mean, I think even I've had to deal with fraud at some point. In terms of my credit card a long time ago. Like, it just happens. There's people in the world that are ready to just do what they need to do to take your data. So if that's the case, that's something that is a use case. Now, in the context of Palantir and cybersecurity, this is really interesting because Forbes came out with an article about 2 weeks ago. I never covered it on the channel because I just didn't get a chance, but they named Palantir number 4 in top cybersecurity stocks to buy, which was very interesting to me. I have not dug super deep into what Palantir's role is in the cybersecurity space, but I guess there is a decent argument to say that their software, given the data tracking and pattern recognition that it's able to do, which is what it was invented for after 9/11 in the first place, probably can play a significant role in cybersecurity, even if it's not as granular as something like a CrowdStrike, but can offer some tools to help find fraud and make sure that thing doesn't happen. Mark says, then bricks are a fraud. Again, Mark, I don't think you've seen real bricks. Like, the bricks don't look like a fraud from this angle. Like, I'm going to be honest. I'm looking at the bricks right now. They look like a fraud in real life, but they don't look like a fraud from this angle. Now, I'm not going to say if they're a real fraud, but from the computer, they don't look like a fraud. In real life, they look a little, not bricky, but as per what you guys see, 10 million people in London. Yep. This is a very big deal as well, affecting all them. Okay. So what are the implications on the NHS? So, I mean, like, I don't even want to say tinfoil hat here. This is more so like 2 + 2 = 4. If Palantir is being used by the City of London Police, one could argue the government is getting a little bit warmer, and I think they've been very warm to Palantir. I think the propaganda in the UK makes us think they're not warm, but I think the government is continuously saying, here's another use case for your software, another use case for your software, another use case for your software. And it just seems like the use cases for the software keep piling up. The NHS deal, again, and we're going to talk about the NHS in a second, it just seems more likely than not, if the City of London Police is giving Palantir this money, we don't know how much this deal is worth, but they're working with Palantir to implement this. Why wouldn't the NHS do it, right? Again, it goes back to me of like, there are no competitors that I see in sight that can bid for this big of a contract and actually get the job done. And again, if Palantir's getting these deals in for the city police, I'm pretty sure they'll be able to get some deals in the context of the NHS. It would be hard for me to imagine it doesn't happen. Having said that, this is where we get to our next story. UK, the United Kingdom, is battling a hacking wave as ransomware gang claims the biggest ever NHS breach. The NHS says it is urgently investigating the alleged theft of patient data. Now, it's really interesting. I would like the chat to help me here. I don't even understand why patient data is the most meaningful if the entire system is socialized. And maybe this is a little bit my naivete, so I would love to get a little bit more opinions here. But in the United Kingdom, if you can't really do a ton of private healthcare, then this patient data, I'm assuming they're using it for something. They're selling it in some capacity. They're monetizing it in some capacity, maybe in some other illegal private healthcare manners. I don't know what they need the data for, but the point is, there are people that feel that NHS patient data is valuable, and there's probably a reason why it's valuable. And as a result of that, they are hacking the United Kingdom. And if they're hacking the United Kingdom's NHS, then that is a bad thing. Let's read a little bit from the article. The UK's largest NHS trust has confirmed it's investigating a ransomware incident as the country's public sector continues to battle a rising wave of cyber attacks. And this NHS trust is just a hospital, so this is one of the largest hospitals. Barts Health NHS Trust, which runs 5 London-based hospitals and serves more than 2.5 million patients, was added to a dark web leak site of ALPHV ransomware gang. The gang, known as the Black Cat, they're trying to be Kobe Bryant out here, says it has stolen 70 terabytes of sensitive data in what it claims to be the biggest breach of healthcare data in the United Kingdom. Now, one thing, if it's ransomware, they might just be holding the data as ransom, and that's how they monetize. They're like, we're not going to give you the data back unless you wire us money. That might actually be the way they monetize. Samples of the alleged stolen data seen by TechCrunch include employee identification documents, including passports, driver licenses, and internal emails labeled as confidential. That is very sensitive. The incident is the second breach of NHS data in the recent weeks, as first reported by The Independent. A June ransomware attack on the UK's University of Manchester saw hackers access an NHS dataset that holds information of 1.1 million patients across 200 hospitals. I do remember this. I didn't do a video on this, but I do remember seeing that article. The compromised data gathered by the university for research purposes includes NHS numbers and the first 3 letters of patients' postcodes, according to reports. That's also big as well, because in terms of advertising, if you know where they live and you can send them spam advertisement mails direct to their houses, that's another way you can. Yeah, so it seems like there's a lot of different ways you can monetize something like this. As a result of the attack, which was claimed by the Black Basra ransomware group, more than 90 organizations reported breaches of personal information. This includes the universities, the UK's largest private pension provider, which said that the personal details of almost 500,000 members. See, none of this is secure. Right? I mean, that's the point of this article. That's kind of the core point. When asked by TechCrunch, Capita did not dispute the reporting, but declined to say how many, if not all of its 61,000 employees were impacted and what types of data were accessed. Now, does Palantir fix this whole thing? I don't know. What I do know is if there is a federated data platform and all of that patient data, all 70 million pieces of patient data, are not just within individual UK trusts, but they're in a larger federated data platform that contains is essentially a container for all of that, for all of those UK hospitals in one place. One could argue that Palantir would have some guardrails and security to be able to stop something like this from happening. There was also a leak with Facebook a couple of weeks ago. I did cover that, where Facebook pixels were attached to corresponding NHS subsidiary websites, and Facebook pixels are essentially used for advertising. They integrate really well with websites like Shopify and really any other e-commerce store. And so if you have someone's pixel, you can basically track all of their cookies. You can track exactly what they're doing on the website, where their fingers moving, all that stuff. And then you can retarget them with really good advertisements. And so that's why Facebook ads are good. So that NHS subsidiary websites mixed with Facebook pixels leaked, and a bunch of different, this is actually Facebook's fault from the article. A lot of patient data also got desensitized. So look, can Palantir solve this stuff? I don't know. But one would argue that one of the requirements, if you're getting $500 million from the NHS, is to make sure stuff like this is less likely to happen. And to be honest, there hasn't been a Palantir data leakage of epic proportions in, I think, the past decade. I mean, I know there was the JP Morgan scandal, so that is one of those things that they had, and I think that was 2015. But that wasn't massive. I mean, that was a few emails here and there. That wasn't like, people's bank accounts got leaked or anything. So I don't know. And I'm feel free to send me any articles if it has been that bad. If they don't have a Cambridge Analytica under their belt, maybe Palantir protecting the NHS actually will protect that data in a meaningful way. So hopefully that'll be a good thing for Palantir. Crossroads says UK has a human rights act that protects the right to respect for your family and private life, your home, and your correspondence. 1998 law stronger than our expectation of privacy. Yeah, it's so interesting, right? The United Kingdom has, and the Europe in general, GDPR regulations, they have all this emphasis on privacy and data protection and ethics, but then they don't have the technical prowess, like the technology, to be able to back that up. And so it would be so ironic for Palantir to not get the NHS deal when this is the part of the world that actually cares about the software Palantir's made. The United States doesn't care as much as the UK for what Palantir is building from just a pure moral, ethical perspective, logical perspective. So it's interesting to see that, the UK has all the issues, but in terms of propaganda, but doesn't have the actual technology embracing. FBI leak, what was a user error? Okay. I didn't know about that. Palantir is my second biggest holding. Austin says, Carp, we have already had hundreds of conversations with potential customers about deploying their software AIP and are currently negotiating terms and prices for access. Hundreds, commercials is only 155 now. I think these comments that Carp said, we have to take with a grain of salt. Either he is absolutely like guns a-blazing saying we are in hundreds and hundreds of conversations and Q2 is going to be crazy, or it's a bit hyperbolic and he's saying, we've had hundreds of conversations, but those hundreds of conversations have happened with 20, 30 clients. It's kind of hard to interpret it. My gut feeling is that, yes, there is a ton of demand. And again, Q2 customer count is going to prove everything. But if there is not, or if that demand can't be closed in Q2, then I think we have a little bit of a dip. And that's fine, because that's a dip I think all of us are waiting for. But if Q2 customer count is good, the market's going to soon recognize that dip's ridiculous, that revenue is going to come very soon. And to be honest, that the high frequency trading algorithms might screw it on earnings day if the revenue appreciation is not there, but it's the revenue appreciation will be there. Now, if the revenue appreciation is there in Q2 because of those hundreds of conversations turning into actual deals, which, is not the best thing for Palantir, because then they have to beat that in Q3 and Q4. Like, as a public company, like, imagine they showed 700 million in revenue, some ridiculous argument, right? That means Q3 they have to show 701. And I don't know if they're prepared for the entire year. So I think they get a ton of contracts and they look at them and they're like, how do we splice this up to make sure the entire year from a Wall Street perspective is well balanced out in terms of deals? I mean, one could argue, Palantir's got a $200 million deal from like 7 or 8 different commercial clients, but they don't want to recognize that revenue in Q2 because they want that to, kind of go throughout Q3 and Q4. So it's very dicey how they're going to show their numbers. But the point is, if customer count goes up, then everything should be okay in the rest of the year, throughout the rest of the year. Amit, do you have anyone that could speak to how long the acquire, expand, scale phase should be on average? From what I understand, it's 18 months. I mean, I talked to Sachin about this, who's worked in the consulting sector, so he understands a little bit more. It's 12 to 18 months. I think that is the time on average. And we're talking about big deals, right? Like, when you're talking about closing $10, $20 million, like those really big deals, I don't think there is acquire, expand, scale for companies that are paying 150 grand a month. They're paying as they go. They're $500,000 deals. Those are just like, you get in there and yeah, you want to expand and scale eventually, but they're paying as they go, right? That's just residual revenue that's coming in. For like the Tampa Bay Generals, the Cleveland Clinics, the Ciscos, that's where I think you acquire, expand, really have your FDEs work with them, build out what Apollo looks like for a Cisco, and then you scale. And for those, I think it's 12 to 18 months at least. There are accounting rules, how to recognize revenue. It's not do whatever. It's better to show on report. I agree, but we all know companies do financial engineering. I mean, that first quarter of GAAP profitability was purely let's do whatever it's good to show on the report. It was I don't think they did anything illegal with those accounting rules, but it definitely wasn't, the most easiest way, I guess, to engineer GAAP profitability, which is why I think the market didn't respect Q1 or Q4 2022. Remember, we went right back down to $7 after we came to 10 because we were like, this is not really GAAP profitable, right? And the market figured it out quickly, and then they sold it off. This quarter, when it was actually GAAP profitable and you get the AI boom, it was much more easier to justify it. So I don't know exactly how they do it, but we'll see. Amit is okay talking with people that speculate but refuses to talk to the kid. You know what, Matt Money, just for that, we are getting you into the stream if you are available. I'm tweeting you the link right now, and you're going to join us, and we're going to talk a little Palantir. We're going to do Palantir Weekly early. That's what we're going to do. We can talk a little bit about Google too. We'll have some fun talk for the next 20 minutes. How strong is the chance of underwhelming Q2 results from Palantir? I think a lot of retail assumes hundreds of calls equals hundreds of deals. Massive revenue lag could shock a few. I'm not wearing pants. Okay, that's all right. We don't need to see your pants, but that's okay. It's all right if you can't make it. I think the chance of Q2 being underwhelming is very possible. I think it's very possible. Now, I'm not going to put a percentage number on it, but it could be bad. The reason, and again, bad means they expect 528 million in revenue. Let's say they hit 530 million and customer count grows modestly. That's not a reason to sell off the stock, in my opinion. I don't think Wall Street is expecting 750 million. Like, I think to keep it in the 13 to 16 range, you've got to slightly beat, and the rest to be some part of the report that's exciting, like net dollar retention goes up, customer count grows up, average revenue TTM per top 20 client goes up, right? These little things here and there. GAAP profitability continues to sustain itself, and I think we were 1 cent GAAP profitable. Can we get to 2 cents, 3 cents a share, right? That would be exciting. If we just do what we need to do, we're GAAP profitable, we get our revenue, and customer count goes up normally, there should not be a reason to sell off the stock. Unless the expectations of Wall Street are so sky high, which I don't think they deserve to be. That's like Nvidia at 300. Those are the expectations that need to be sky high, and Nvidia delivered phenomenally. So, I mean, there is a great chance that it could tank just off the sheer fact that Wall Street doesn't like us meeting guidance. But do I think we shit the bed on revenue, shit the bed on customer? I don't think that's the case. Given all the deals we've seen, remember, we had Panasonic Energy of North America. We had the Amazon deal. We had this London deal. We had $110 million from the Space Force. We got a contract today for like $300,000. I forgot what it's for, but it's some governmental agency. The total value of the contract is $42 million. And there's a bunch of other deals I'm forgetting about right now that I've done videos on. So like there was a decent amount of stuff over the past 3 months. Question is just how it gets there. Matt Money says, if you are truly waiting diligently for Q2 earnings, you aren't thinking long-term enough and would likely be disappointed holding Palantir. Yeah, I agree. I mean, look, at the end of the day, I've kind of decided I just don't want to sell my shares for a very long time. And I really want to hold on to these bad boys. Rain or shine. I mean, even the people struggling to sell, at 16, 1640, I'll get it back at 14. It's just like the mental stamina you have to go through to do. Like, imagine you sold on Monday at 1607, right? You sold. It's at 1680 today. I mean, like, you would be feeling like shit because it's just like, well, why? But 1607 is a great price, right? Like, theoretically. But then it just, with these types of stocks, there's momentum. They keep going. I mean, or they have the potential to keep going. Big tech stocks can rally. And you don't know why. It's a random week in July. I mean, yeah, I know there's CPI, but theoretically, weeks in July and August, we're supposed to have little sell-offs here. It's not supposed to be momentum. People are up 20, 30. Robinhood. How much is Robinhood up this week? How much is Robinhood up? Robinhood is up, I think 30% or some crazy number this week. Today was up to, it's up 26% for the month. Yesterday it broke, it's up a lot, right? And it's just a random week. So it's hard sometimes, to time these things. Artist here, thank you for the $1.99 super chat. Appreciate it, man. It means a lot to me. Thank you for the $2 super chat. I feel like 199 is worse than nothing now that I sent it. No, honestly, bro, like any money from super chats, it makes a YouTuber's day. It means a lot. So if it's $1, and you don't have to send any money, like I know you, so $2, $5, $10, $1, whatever, it means a lot. Okay, I just blew out these vanilla chai candles. By the way, let me know if you use scented candles. I remember in college is when I started getting into them, and in my apartment that I paid for the rent. Because I had a fucking job in college, so I was fucking paying my way through that rent, even though it was $500 a month. It wasn't too bad. It was a nice little dorm I had. I brought in a ton of candles. And so when the ladies wanted to come back to the little crib, smelling like some vanilla chai. They're like, oh, this guy has a little bit of class. Know what I'm saying? That this clap was happening a little bit more when we had the scented candles. So anyway, Bay Ray up 117% on my hood leaps. Very happy for you, man. I am my hood calls. I have spreads. I don't have just naked leaps, and they're doing pretty well. Got them pretty cheap. So let's see how long they can keep going. Other people up 200% on hood leaps. Not bad. Not bad at all. Let's see where it keeps going. Austin says maybe worst case 18 months pilot expansion 2025 being a step change in stock price to $30 per share per minimum as these new AIP customers enter high margin recurring scale. Yeah. So Daily Palantir, that Twitter account, which by the way, if you're not following, you need to be following. Me and Andrew's the guy who works with me on it. We have a lot of videos and we are tweeting out tons of videos a day of Carp speaking from 2021, from 2020, from 2022, recent interviews. And every time they pop on my feed and it's like this 40-second tidbit, I'm listening to it and I'm like, oh my goodness, like it's so hard not to be bullish. Because again, when the guy's not, pumping 17 TikToks a day and you're not seeing him, we only have, like the last time we heard from him was June. It's been about 2 months, right? In terms of a public conference. And so when you're not hearing from him constantly, you kind of forget how excited you get about listening to the CEO of a company talk. But when you're listening to him, from like in 2021 talking about how advanced the products are, how insane, and like you're seeing some of it happen in fruition. All you need is the numbers to back up the prophecy he's laying out. And then we're going to get more, profits from the actual profit. But I don't know if it's going to happen on a short term. We have to see if it happens. And if it does happen, it's going to be really, really fun. Did Amit just say he has the clap? Yes, that's exactly what I said. Amit, tell me why last month the 25 $15 call and $20 call is up the same amount. Are you talking about on Robinhood or are you talking about on Palantir? If you're talking about Robinhood, if you're talking about any stocks, to be honest, options are so volatile. Like they can be screwy. I mean, there are certain options I have where the stock is up really nice, but the option is flat, right? And you would imagine, no, well, the option's supposed, well, it's all a game of these algorithms playing back and forth. In general, before your thing expires, if the stock is at a decent price, the options should return decently. And so that's what I just kind of wait for. You sneak girls into your mom's basement? No, but one time I was taking a girl to prom and my mom didn't know I was dating her because I didn't tell my mom she was my girlfriend yet. So we were in our basement and my mom was like doing her makeup for prom. So eventually I told her, Mom, this is my girlfriend. But that is, I guess that's sneaking her into the basement without my mom knowing. My coin position went green today. Yeah, coin was up as well. Coinbase hit $87 a share. I mean, this thing at 34.46. This was stupid of me to not take a serious look at it. I mean, I'm just always so skeptical of all the stuff going on in crypto, but that was one to take a look at. The SEC thing seems like it's going to be a nothing burger potentially. There was another. The Bitcoin momentum led to it going higher, and there was another catalyst I'm forgetting for Coinbase for why it's up. It's slipping my head, but Coinbase I should have looked at a lot more at. That's $46. One other thing that was important. Damn it, I was forgetting. I was going to transition to one thing. I just forgot. The Coinbase thing got me off my head. Okay, I'm going to transition to this. There was something I wanted to say after Coinbase. All right, forget it. I'm going to go to the next thing. But yeah, Coinbase is up really nicely. And obviously the macro is pulling up a lot of stocks as well. Now, I did this piece on Twitter today. Talking about the Time magazine. I did a video on it today. The last 5 minutes are me sort of analyzing it. Not going to read through the whole thread. But one of the things I did want to say is a stat you guys might not have known. 2018, Mark Benioff, founder of Salesforce, bought the magazine for $190 million. Now, media company valuations are horrible. You could argue $190 million is ridiculous for a media company. But the Washington Post was sold for $250 million. And when I checked their stats, they get about 150 million unique visits a month. So you're paying almost 50 cents for each of one of those visits. Time was sold for 190 million and gets 20 million unique visits a month. So, back in 2018, I'm assuming the traffic was relatively the same. It couldn't have been that different 5 years ago. So if that's the case, Mark Benioff is paying a massive premium. And the reason he's paying that premium is because of the brand identity of Time. And so that goes into the point of this thread, which is that I think the real point of the thread, or the real point of the piece was that really serious journal organizations, media companies are starting to look at Palantir. This was one of the quotes from the article. Virtual war is not a war between soldiers, tanks, or airplanes, but a clash between algorithms. Here, victory means the ability to build the basic rules determining how the world works. Inferior algorithms will simply operate according to the rules and outcomes set by more foundational software. Geopolitics used to mean the struggle to control the physical world. In the future, it will be about the struggle to build a virtual one. And so Ukraine has been the sort of overarching reason for why these publications are so interested in Palantir. Palantir is the small $30 billion company getting exposed to massive amounts of people because of their role in Ukraine. And I'm starting to think more and more and more what's going on in Ukraine is a legitimate moat. And it's just hard to ignore it as hard as, some people may be thinking if it's not showing up on the numbers. Because at the end of the day, it will show up on the numbers, given what it's doing. So yeah, I think the Time magazine, the implications of that are pretty massive. And again, I read through the whole thing today, like really went through it. And for that journalist to feel that they could not go home without thinking about the software. I mean, how many people interact with a piece of software and then when they go home to their regular life, they're like, man, that defense tracking software that I played with today was really interesting. I mean, he talks about pressing a button and being able to coordinate satellites and literally see Antarctica and whatever spot of Antarctica you want to see, or some ridiculous thing like that. That level of meta constellation with Edge AI that we've been talking about for the past couple of years now, seeing the real use case of that, it's special. And then the overall narrative of where the world is going in terms of deglobalization and problems with China, Taiwan, like it's just adding to a larger argument for why NATO should pay a crap ton of money to Palantir for their software. And if that's the case, it's going to be a very big market opportunity for Palantir. I've gotten my dad on the Palantir bandwagon. Yeah, my dad, I think he has 200-300 shares. My sister has some shares as well. I've gotten my sister into SoFi. I said this on a previous live. I told my sister when I saw SoFi in May starting to rally from 470, and I saw how cheap the options were. I told my sister to give me a lot of money because I was like, I'm going to invest it for you. And unfortunately, her Robinhood account doesn't have options level 3 trading. So I was like, put that shit in my bank account today. And it took her like a week to send me all the money, but then I invested all of it. And she's up on it. So there's certain opportunities where you just have to keep doing it. I need to buy more shares. They're going to be bigger than Google. Yeah, see, I don't think it's going to be bigger than Google. Personally, I don't think it gets to that $500 level. But yeah, even like, again, the piece I did on Google the other day was like, Google's moat is massive, but at the end of the day, they are not prepared for the next decade of innovation, in my opinion, in the context of geopolitical turmoil and what software can do for your enterprise. What do they sell to businesses? They sell GCP. They sell cloud compute that just got profitable. Yeah, that's going to increase, but it seems like that's a commodity. What's not a commodity is the actual analysis of all that data that you bring into an organization. Now, their advertising business is just so massive because the entire world uses Google that's why they have a moat. But do I think Google's a 10x in 2030? No. Do I think Microsoft is? Way more of a chance Microsoft 10x's. What's that? Microsoft will be 3 trillion, 30 trillion? Yeah. Do I see Google as 10 trillion or Microsoft as 30 trillion? I would say Microsoft is at 30 trillion way quicker than Google at 10 trillion because Microsoft just has a way more diversified revenue stream. Do I think Palantir gets 300 billion? Yes. I think that's possible. What happened with the NHS hacking? So just rewind a little bit. We talked about the NHS got hacked by one of this ransomware spy group. And so the implication was Palantir hopefully could be able to solve issues like that. Bitcoin is going to have the best returns. I might be starting to get warmed up to the little crypto Bitcoin craze. I'm not going to throw a ton of money in it, but might just throw $1,000 into it and see what happens. I mean, look, if Bitcoin really does 10x, that 10xing it by what people are saying 2027, 2028, 300,000, I'll be happy with $10,000. I'll be very happy with 10,000. If it happens, we'll see. So I don't know. I'm thinking of just throwing 1,000 at Bitcoin and seeing what happens. How do Palantir deal with the conflicts of interest if they're providing 2 direct competitors with AIP? That's a good question. I don't know the answer to this because I know BP stopped them from being able to serve any oil and gas companies. I don't know. I think the good part of this question is that means the company that doesn't want them to deal with a competitor is going to pay a higher premium to keep their software in-house, which is good. But that does mean they're not going to scale as aggressively, which is okay if the revenue is still coming in, right? Like Snowflake can be everywhere, but Palantir doesn't need to be everywhere if they're generating high revenue. And there's probably less operational costs because you don't have to send a ton of forward deployed engineers to multiple companies, all that stuff. I do think there are worlds in which they can solve a problem for an industry and work with different quote unquote competitors in the industry. Like working with BP shouldn't stop them from working with a renewable company, even though they're both in energy, but working with BP maybe does stop them from working with Shell. Now, granted, Palantir also works with Exxon. So maybe that exclusivity stuff with BP ended because we know explicitly Palantir works with Exxon. So not sure exactly, how it works out, but that is something that is important to think about in terms of competitors. All right, we have 10 minutes left. Twitter, if you have any questions, you can request a question. And if you want a question, we'll have you speaking. You'll be live to 281 people on YouTube, and you'll be live to the 10 people on Twitter. If not, then we'll just keep doing the YouTube questions. Don't do crypto, but I'd buy Square. Yo, Hindenburg, I think, is officially out of their position. I think they might have got out of their position when they realized how crappy the short report is. Square is doing amazing. I mean, what's the stock at right now? It's at $70. Square, 71. Over the past month, it's up 10%. It's not bad. And I think they were at like 75 when the report was published. So it's recovering back to where they were before the report. But the report, Hindenburg wanted 70% decline in order to get a profit on their short. That didn't happen. There was no 70% decline. So that didn't happen. First night off for 19. I worked 19 mids, 8 in a row. All right, Midwest. I hope you enjoy Finance Junkies. Hope you're enjoying the show. Hope you're relaxing with your kid, getting some beer or popcorn, and get ready to enjoy the rest of the night. Finance Junkies, we're talking about a bunch of things. We're talking about Microsoft. We're talking about CPI. We're talking about a bunch of implications. Oh, by the way, Kathy, we had to talk about Kathy as well. She sold 100,000 Coinbase shares on the pop today, and she bought DNA. She bought fucking DNA. She bought 1.2 million DNA shares, which is just like, people don't, you guys might remember if you're an OG of the channel. I was talking about DNA back in October at $3. I really liked it. I got so infatuated with the business model. And then I publicly said I sold it at $2.92. So I made either I made $40 or I lost $40. It was inconsequential to my position. Because I was like, look, I don't like how management is operating this business, even though I love the idea of this like AWS of synthetic biology, which I still think is going to be big over the next 20 years. Epsilor is also kind of in that space, even though I don't think they're doing synthetic biology. So I want to invest in them. I really do. But I need more results from management. I need to see a lot of less insider selling. The insider selling was just atrocious over the past year, like absolutely ridiculous. It's similar to Open Door. You'd be like, are they cleaning house or like what's going on with the stock? Now, Kathy, I think, has like a $6-7 average. So she's still holding a lot underwater, but she's buying the dip. I mean, there were weeks in October where Kathy was buying 4, 5, 3 million shares like in blocks when it was at $3. So she was, it seems like her team is very bullish on DNA, but it might take a while for the stock to get back to normal. Amit, do you think SoFi is overvalued currently, looking to increase position, but not sure if I should wait until after earnings? I do not think SoFi is overvalued at all. I do think it is risky buying it at $9, high $8, because, earnings might not be what we want. Earnings might be a little bit bad. I don't think earnings will be bad, but if earnings is bad, if they're only 4 cents away from GAAP profitability, even though there were 5 cents last quarter and the market's expecting you to get to 1 cent away from GAAP profitability, maybe the stock just tanks just because the stock tanks. Last time they beat on 3 areas of their business, Galileo showed a little bit of growth and then the stock went down like 20% that morning. It's always hard buying before earnings, and I haven't mastered the art of figuring out how to buy before earnings. But do I think it's overvalued? No. So do I think if you're long-term? Yes. But if you're playing it for earnings, you could get burned on it. But if you're paying it for the long term, I think $8-9 is still okay, even though $7 could be a little bit better. Now, do we get back to 7s? I don't know. Especially with CPI coming out tomorrow, I don't know if we get back there. This is why when it's undervalued, bro, this is the one thing I've learned is when it's undervalued, you fucking take your money and you put it into the company. You stop thinking twice. This is what I had to tell my sister. When SoFi was undervalued, and I'm like, Didi, because in Hindi, we call our sisters, big sisters, Didi. It's like, Didi, give me money. I will make money for you. Like, just trust me on this one. And she was a little hesitant, even though she genuinely trusts me. She generally trusts me on things. But I was like, bro, just give me the fucking money. Okay. I was robbing her bank. I was like, just give it. You have a ton of cash. You've been working for 7 years. You haven't had a good return on any of your investments. She's bought stocks here and there. I'm like, give me the fucking money. And I forced her to go to Bank of America and just deposit all that money in my account. And then she takes that money over the course of a week and I dump it into SoFi options. And within, at the peak, bro, she was up 20 grand. So I'm showing hey, you're doing kind of, she was just like, I can't believe you fucking did this, but whatever. It's cool. So the point is, when it's undervalued, when you think it's undervalued, you go in. That's one of my biggest regrets this year. At $7-8, I knew Palantir was undervalued, but I did not go all in. I did, there were certain positions I absolutely should have trimmed and dumped into Palantir. And now it looks insane I didn't do that. But, hindsight is always 20/20. I think the thing about being an investor is as you get older, you start to realize, oh, these opportunities are legit and I should not be afraid of these opportunities. And if it goes lower, then okay. If it goes, sure. If SoFi wants to go to $3, whatever. But I should not be afraid of some of these opportunities. And granted, the bull market's happening now. Maybe, right? There's a asterisk there, but we're getting into a little bit more of a better market. So that's the same thing with Robinhood. I didn't have a ton of capital, but when Robinhood dropped down to like put 5,000 in, I was like, all right, it's in the options. Let's see what that. Now those options are up 70, 80%, because it was that moment where I made the decision and it was right to do it. You're freezing a lot of it. Yeah, I'm sorry about the Wi-Fi today, guys. I don't know what's wrong with the Wi-Fi. It's being kind of stupid. I don't have any other tabs open, so I don't know why the Wi-Fi is sucking today. So I'm sorry about that. It's showing 1 bar on my signal. I'm like, why are you showing 1 bar? The Wi-Fi should be fine. All right, so I'll fix the Wi-Fi before we get into Finance Junkies. Look at Harry. I'm 22 and I put 10,000 in SoFi at $5. See, that's what I should have done at 22. I mean, like that's amazing. That's phenomenal. That is absolutely. So you're up what? How much? 10,000 at SoFi at 5. Let's do the math real quick. So 10,000 at SoFi at 5. That's 2,000 shares. Right now it's at 9. So you're up. Yeah, you're up $8,000. You're up about 80%. That's amazing. That's awesome. All right, Finance Junkies is starting in 4 minutes. Make sure you join us there. The link is already on my YouTube channel. Get some beer, get some drinks, get some popcorn, get some food, some chicken, some vegan burgers, whatever you eat. You got an hour with the boys to talk about stocks. So make sure you join us. Got a lot to discuss. Let me fix this Wi-Fi issue because it's being stupid. But we'll see us there. Palantir more likely to 10x or Microsoft 2x. I think Microsoft's more likely to 2x, obviously, than Palantir likely to 10x. I think a 2x is just way easier than a 10x. I don't care what the valuations are. But I'm investing in Palantir for the 10x. That's where the risk comes in, right? Bigger risk, bigger reward. Microsoft's obviously a lot more safer. All right, guys. I'll see you in Finance Junkies in a couple minutes. Thank you, everybody. Bye-bye.